Hi and welcome to the Market Alert for Tuesday the 24th of January 2023. So leading indicators, raw recession as Nasdaq soars to best start to year since 2001. Recession risks soars, but the Fed rate trajectory shifts hawkishly to create a massive short squeeze. And prices are continuing to move higher as we looked at yesterday. Stock rally as tech leads ahead of earnings. And this is going to continue until the 1st of February at least. US stocks rallied amid continued tech strength heading into heavy slate of earnings. So we've got first quarter earnings coming up then. So US stocks gained and continue to outperform amid lack of catalyst heading into key earnings, with the markets pricing a slower rate of increase from the Fed next week. So instead of the 75 basis or 50 basis, they'll probably go for a quarter, and that'll be even more bullish for the market because it'll be an indication that, okay, they've done what they needed to do and we're not going to have inflation anymore, which is a pack of lies. But that's how it works, just to keep the stock market moving to the upside. Today we've got all flash news, just refresh this, starting off at 8:15 with the French. It's a bit of a pain, this one, because you've got all of these flash news is 15 minutes, an hour, 20 minutes apart, whatever, all the way through to the US at 2:45, and then 3 p.m. we've got the Richmond Manufacturing Index, which is forecast lower. If it comes out lower, that's going to pump the market higher as well, because it's the Fed is doing what it said it was going to do, and that is combat inflation. So let's have a look at yesterday, and before we do that, let's just have a quick look at the implied volatility. So in the implied volatility for yesterday, we've got 1597, this dropping. We needed to get back down to this 1467 level and a bit lower. If you look at the 6-month charts, you see what I mean. We did have a nice drop here, and we need to get it back down to that level. And then finally in the 12-month implied volatility, you can see the sort of levels there that we're looking for. And the lower this goes, the bigger the correction will be when it eventually turns up, which at the moment doesn't seem to want to happen. So at the moment we're at 1597. We could do with this dropping down. We could do with it going below 1349 to stand any chance of a decent correction coming into this market. The lower the implied volatility goes, the bigger the correction will be. That's been the same since 1998 when I started looking at this. So let's have a look at the stock markets, kick off with the Dow and work our way through to the FTSE 100. And in the Dow, you can see this moving strongly to the upside yesterday. It happened in the afternoon, which we'll look at in a minute in the 30-minute chart. Price is trading up to towards the 50% retracement there for the Dow. And in the 30 minutes, you'll see that we were sideways. We started to move up in the futures before New York opened. We then had a sell-off for 100 points plus down to the high of Friday, before the market then moved back to the upside, double topped, and then we had a bit of selling before the market actually closed. In the German DAX, again, you can see this making its way back in the daily chart. 78.89 is today's targets, and then the recent high will also be a target as well, which is going to be 15,272, which wouldn't take a lot to actually get there from where we're currently trading. The DAX has put 400 or 500 points on some days, so that wouldn't be an issue at all. In the 30-minute chart for the DAX, yesterday we moved to the upside sharply. We then moved down, and then we saw the market find support and then move back with the Dow. It was the Dow that sent the market back to the upside there yesterday. 5-minute chart, we saw prices kick up to begin with, and then they sold off to the DP, where the market then remained for the most of the day until the Dow opened. We had a bit of a sell-off that came back to the support, which you can see there, and then it just moved up with the Dow. Trades so far this week, let's have a look at those. So on Monday, we've got a profit of 172.04, profit factor of 10.28, and we've got 50-50 win-loss ratio, so cut the losses on the losing trades, let the profitable ones run. So a good start to the week. Again, we'll see what happens there. I was actually in that long in the afternoon and wasn't paying attention. I had a friend turn up and it took me out and then it went without me, but that's the way it works. It does need your focus to actually concentrate on things, but some people just turn up at the most inopportune time when they could have come and seen me all morning, but no, they turn up just after 2:30, but there you go. One of those things, and being a bloke, I can't multitask. I need to concentrate on what I'm doing, but there you go. So it would have been better, but got taken out in the 5-minute chart when it came back. Stopped too close. Could see it was going to move higher, but then just had the stop too close and taken out, but not to worry. And overnight, you can see that the DAX has moved to the upside and continues to trade now to the high. Showing a bit of support there. It's got to stay above this in order to move to the upside to get to the 78 and 89. So you're going to get a bit of volatility around this level. That's the 1 minute. I wanted the 5. Let me just go back to the 5. So coming back to the high there, I might get a bit of a pullback, but wait till the Dow comes on stream and the Nasdaq moves higher again. It'll drag everything to the upside. And then, of course, you've got the flash news just to add a bit of spice this morning to particularly the European markets. In the S&P, also moving quite sharply to the upside there in the daily, heading back towards 78. We're through the 62. I've taken that off. Market sideways so far overnight. There's your move yesterday. Market up and then profit taking coming in, which you can see there. But overnight, market sitting on the close, not near yesterday's high, unlike the DAX, which has just gone through it. In the FTSE 100, looking like the DAX, isn't it? Heading back to 62, unlike the DAX, which is already heading to 78. So again, showing some strength there. 30-minute chart, very choppy yesterday, managing to move to the upside, ignoring what the DAX was doing, but then came back and then moved higher with the Dow there. And in the currencies, you've got the GBP, JPY, stuck at that 50 EMA, can be a resistance area of some note. 30-minute chart saw this rally in the Asian session, then when the UK opened yesterday, it was hammered down for a while and then moved up with the Dow sitting on the DP at the moment, but it looks like a bit of a weakness there. In the pound, continuing to move back up there, and you can see we've got some resistance across the top here, which is probably why it got hammered down yesterday, plus the dollar moved to the upside. As can be seen here, mid-morning, as the New York traders came on to the electronic session, got up and started work, the dollar was moved higher and the pound lower and the metals lower as well, which we'll see in just a moment. So let's have a look at the dollar. And in the US dollar, doesn't seem a great deal here. If we just bring this back up, spread this out a bit, you can see yesterday's dollar. Let's have a look at it in the 30-minute time frame. It'll be easier to see. Just reset the chart. There you go. So is that the right? Yeah, 30-minute chart. Oh, hang on a minute. Let's just drag this over. I was going to say, it's not that it doesn't look right, but it is right. So yesterday we saw the dollar move up to the 200 MA in the 30-minute chart. And then overnight, we've seen it move to the downside there, which has had an impact on the metals yesterday. So let's take a look at those before we finish off. So starting off with silver, yesterday we saw the weakness starting to come into the market, and you can see this obviously continued after I recorded the market alerts. The trading down to the 50 EMA, where it became support in this case for the silver price. We then get to lunchtime, New York, and the market absolutely hammered. It's not New York anymore, it's the CME, isn't it? It used to be New York on the COMEX. And the market then reversing back up, seeing a buying opportunity in the market, dollar weakening, and we moved back up and more or less taken back everything that they slammed down yesterday. So the rinse and repeat that we've seen for the last 15 years doesn't seem to be working, particularly in gold. If you have a look here, yesterday it was also slammed, but it's already above the high for yesterday, as can be seen by the 30-minute chart. So we've got a hammering when CME opened, and then move back to the upside, and then is above the high at the moment. And so to finish off with the gold-silver ratio, you can see this yesterday. We just expand this out, how that weakness in silver, or the hammering that silver got, made a difference to the gold-silver ratio, and it moving up and then coming off overnight. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.